Thank you so much for having me here. I think most of the important reasons is that I'm a trader for 9 years, and I actually wanted to trade for more than my own funds. So we opened actually a friends and family contractual fund where I helped people already to trade for a couple of years. This got full, as in the Netherlands you can have only maximum of 50 participants. So we had to kind of level up to the next level, which resulted into open a securitization firm, DHF Capital, and later the general partner, DHF Asset Management, as a regulated identity to host hedge funds. Basically, we are a multi-asset firm, and we would like to help people to have all their asset classes covered. So we are having a wide range of traders that are spread all over the world. We are 24/5 behind the charts, as we always say. And we are trading the currency markets, we are trading the equity markets, we are trading the bond markets, we are trading fixed income. So we have 6 portfolio managers covering 6 different asset classes. And we make mixes of that. So our alpha fund is a default mix that has all the different asset classes as part of your portfolio by doing one investment instead of finding 6 different funds where you have to make the split and also the rebalancing yourself to keep an active portfolio. Our risk management team, actually in the office here in Dubai, is our IT team in the DMCC. And basically we've seen that the most important part is not to make profit. The most important part is to manage the risk. So we have very active risk software running in the background of all our traders, and they are all having daily limits, they have weekly limits, and they have monthly limits. On an individual basis and also as a group, for example, sub-asset class of short-term currencies or the whole currency group or the whole equity group Europe. And we all limit them on the downside and basically take a very old saying, cut your losses short and let your winners run, resulting in our ultimate performance. It was a coincidence on one side and also a well thought out idea. The coincidence part was the COVID situation. We already had the IT office here in Dubai for many years. And we just saw in Europe it was really hard to get to meet new clients in the European region, while COVID was, in our opinion, way better handled here in the GCC. We already had some clients from Oman, and it was a logical choice to also open a DIFC office in the financial center of Dubai and expand here in the region with our sales supportive efforts. Yeah, so we already spoke about the risk management software, making sure that we cut our losses short on the different asset classes. And the second very active, let's say, AI tool that we are using for the last 8 years is a rebalancing tool. So we're doing something that's a bit less conventional. We basically help the winning trader to support the losing trader. So when a trader goes over target, he basically creates funds that we don't need in that asset class. And then we give that to the trader that we still trust to make money another day or another week or another month. But by actively rebalancing this, we keep a very low volatility, way lower than the benchmark, but still having a very good performance. So this is our second little secret to run our portfolio. So the main key securities are FX, equities in Europe and equities in US, traded by 2 different teams that don't speak to each other. So we are keeping those kind of things also in line, that we are not having easy trading and just hedging one market against the other. We are trading on the gold market, active gold trading, but we are also having physical gold as one of our asset classes, where we are buying the physical gold and storing that together with the Emirates Group here at the Dubai airport. So it's a mix of different asset classes, and that keeps the low volatility if you rebalance that constantly, because one market will go up while the other one will go down. Gold and equities, for example, are always like rebalancing each other. And as long as we keep our portfolio in check, that creates a positive return on the long run. It's a very interesting topic. It was the 2003 buzzword, in our opinion. AI came around the corner. We are using algorithmic trading already for 10 years. This is something I use myself for a very long time, as my background is IT. We are pro-technology. We really like the use of technology, but we always combine it with a person. So we might need less analysts, less people who are actually making decisions, as this pre-work for someone who makes the decision can be done by AI tools. We can generate reports, we can summarize the news, we can give the trader what he needs automatically. But we still believe in the manual execution of the final decision. Or even if the AI would make a decision to trade a certain order, we would still like someone to sit behind that computer to validate that decision and, for example, chooses when to exit the portfolio.